Friday, 3 p.m. Eastern Time on the 23rd. So we started with some drama today, kind of like we started on Monday. Market gap down about 1%, and we have spent the entire day just fighting back. I've got a couple trades in to watch for the close. I'm looking to see if prices will pin back around this 5,800 handle. If so, that would be pretty awesome in this final hour. I'd love to see price getting down to 5,800. I put a little iron fly on that level. So I'll be watching here. If we get back near 5,800, this trade potentially pays out about $400 to $500. But I have to get that pretty close to spot on. I've got about a $10 window. Here's what it looks like. We're trading at 58.15, which right now is, let's see what time this is. 3:02. Yep. So about 58.15 right in here. So if we make a little run towards about 58.05, this starts to increase a little bit, maybe about $50 profit. We start getting, later in the day, like literally the last, 10, 15 minutes. Let's go to the final half hour of trading. So if we fast forward to about 3:30 p.m., so in about 28 minutes, this is my profit trap. If we're trading around this between 58.05 to 58.05 to 57.95, somewhere maybe around $100 a profit. So if we make a run towards that level, that would be kind of nice. And here's hoping. So otherwise, just had a broken butterfly today that closed out for profit. I have a put spread combo that's looking good for profit. I've got the iron fly running, so I'll just keep a close eye on these before the close. Let's talk some shop. Currency strength chart for the day. Mostly dollar weaknesses is the big prevailing trend in currencies. They started all last night around 8:30, 8:45 p.m. Eastern time, and the dollar's been hit pretty hard. Actually, most of the volatility has just been to the downside on the dollar, which, is fine. I'm long euro dollar up about 175 pips. I'm looking to target these highs at 115.50. If you're long pound dollar, we're up to some fresh highs. I didn't take this trade. I was looking to see if we could get a deeper pullback into these pockets around 131 to 130. Never got the pullback. Aussie dollar is back up near this chop high. I'm not taking the bait here. I would hope we still have something like this, where if we clear this high, we still get a pullback. Maybe I average in to a kind of Aussie dollar swing trade, area 1, area 2, stop loss below, and see if this will trade up into open space. So I'd still like to see a pullback in some of these currencies. New Zealand dollar, same thing here. One minor pullback. It is open space, towards 63.70 or so, but I'm hoping we can at least have just more of a range trade here. Deep pullback levels. I was long in here. I mean, this trade worked out fine back in late 2024. I bought some more, closed out for break even, closed out for profit, and that was it. I didn't get a chance to buy this one. I bought the Aussie instead. That one worked out okay. Dollar CAD. Somebody asked me about this one this morning. Dollar CAD continues to head lower. We're in the middle of this larger range, so unless you're going down to a smaller time frame to sell the rallies and see if this will trend lower, I would probably I will be just patiently waiting to see if it comes back to like 33, 32, 31 area to then buy. If I can buy it here, take it back to this halfway point. If I want to hold it longer, take it back up here to 145. So there were two pretty good trades on the dollar CAD. One was getting long and staying long into the highs, which was a measured move. And then two is this pattern swing, where it would have been sell the right side, stop loss above the kind of the dollar weekend crash, essentially what it was, and it came back down as a swing trade. So pretty good on the old pound or the dollar CAD. Question comes in pound yen. Pound yen, if you're a scalper, then grind it out. Otherwise, I mean, we're just in a big range. This one never came back down to support in the August lows and never came back to resistance levels. It's still kind of just choppy. I could see this low, if it works its way back down and holds, I could see it making its way back up to equal highs. I could see it making its way back to resistance. So I would, I mean, really, it's like, I guess if we were up here confirming a sell trade, I could sell it. If we're down here confirming a buy trade, I could buy it. Otherwise, take advantage of the volatility and see if the thing wants to, scalp it. I mean, 1 minute time frames, align your like 1 hour, 15, 30, 5 minute, 1 minute. This does have some pretty good movement every single day. So it's more of a scalper's trade in my opinion versus a position trade. I just don't see a good position trade on pound yen. Swiss crosses, Swiss pairs. I'm just being patient. I've got some profits on the Aussie Swiss. I'm looking to see if we get back into this cluster around 55.50. CAD Swiss, I'm going to look to see if we have a move back into like 6,200. Somebody mentioned oil this morning. Yeah, I mean it's still just kind of range bound between. We just have a new ceiling and a new floor on oil. Lows around 55, highs around 65. Pretty sideways. Let's see here. Natural gas, nothing exciting. Gold is making a decent run, but I don't think I'm still not buying gold. I want a position for gold futures and gold. I want a position for them down here. So I'm waiting to see if we pull back towards the 100, 144, 200 moving average on gold. Silver, I'm liking silver. I did actually buy some fresh shares of silver this week on SLV. I put in a pending order down here around 20. This would be silver spot at 29, and down here with a silver spot at 23. So I will be watching those levels on SLV. It's a little bit different prices. I bought spot price around $29. And I've got another position here to buy at 27 and another position to buy around 23.50. So area 1, 2, and 3. I'm looking for silver to continue to go higher. It might take some time, but my measured move on SLV would be up towards about $44. That's the equivalent of a spot price being around $48 to $49. Bitcoin, we did breach some fresh highs this week. So it was up to about 111, almost just shy of $112,000. I'd still like to see a pullback. I think for a healthier Bitcoin market, we should see a little bit of a pullback into some inefficiency. I think that would allow buyers to, step back in. If we already are, I mean, this is overbought, this is overbought, this is overbought. We're showing overbought conditions with divergence. So I'm not jumping all over Bitcoin outside of I'm riding IBIT. I'm not rolling calls yet. I've got a call at 61 out to next Friday. We do have a holiday weekend. No markets open on Monday. Then we close, the month out on Friday the 30th. But I'm letting IBIT run. I did buy a put at. I bought a $45 put. That's just a protection play. So if we end up pulling back, on this at all, I'm going to hopefully turn it was about a $2.50 debit. I'd hopefully like to see that turn into, $4.50, $5.50, something along those lines. If it offers up some hedge protection, that's all I'm really trying to do is just protect the downside. If this wants to run and go higher, I'm letting it run with price appreciation. I'm not trying to cover calls at this time. I just got out of these covered calls last week that they were full income. MicroStrategy, bit more volatile as we would expect. We're at 376. I'm still sitting on a collar trade on this one with a 310 level at 627 expiration. So as long as I'm going to try to take this close and probably that final week of expiration, and then look to roll it out for income. Income on MicroStrategy, income on Tesla, income on IWM, income on SPY. A lot of covered calls, just letting it get close to expiration, and then roll it another week. Out another 1 or 2 weeks and just collecting more income. Coinbase, Ethereum. I'm not in Ethereum. I just talked about this is a pretty clean technical trade. We broke the trend line. If you're willing to buy, area 1, area 2, stop loss below, there is a pretty attractive catch-up trade on Ethereum. I just personally like Bitcoin a little bit better, so that's what I'm focused on. Copper, what? Oh boy. Well, I guess that's interesting. Wow. That's a big pop in copper for a day. I wonder if it stays. I mean, these 3 lines represent a very cheap butterfly spread that I put on. So if price, hits this level and chops around, then perhaps I can still get lucky on that butterfly spread. Otherwise, I'm gonna risk $90. What else? I didn't realize copper was up, almost 4% today. That's a big surge. Japanese yen getting stronger. Nikkei not doing much. Japanese yen getting stronger. This is essentially the inverse of the dollar yen. So if the dollar yen breaks the 140 handle, FXY should be breaking this 66 handle and then hopefully heading up to a measure move around 74 to 75. I own shares of FXY, which is essentially expressing I don't mind being long the Japanese yen. I own shares at $59. So I bought in, over here, and I'm holding. So I initially I was doing a diagonal spread and I was doing covered calls and all sorts of stuff, and I'm like, I'm just gonna hang on to it. I just had the shares. I'm already in profit, and now I want to see if it will run hotter. But that'd be the equivalent of the dollar yen breaking the 140 handle and potentially heading down to 120. EWJ, this is the Nikkei ETF that gets rid of the bottom 15%. So we're up near all-time highs. DXJ, another one for the Japanese yen. The DAX, we had a big sell-off in Europe. Again, probably on the news that we're having tariffs, right? I saw a headline today that was this afternoon that Trump says, this isn't a deal. I'm not looking for a deal. It's 50%. So he's at least the message is at least a little bullyish right now. Just because it's like I don't think it's going to be 50% tariffs on Europe. I mean, if we're changing China tariffs to 15 or 25%, I don't think we're going to tariff Europe by 50%. Also, when you're talking about, I don't even know if you can call what's happening the threat to Apple a tariff. I just think that it's crazy. You're going to threaten one of your largest multinational companies in the U.S. to try to get them to build things in the U.S. I mean, if everyone wants to buy a $3,000 iPhone, then sure, let's tariff Apple. But I don't know. I just think it's noise today. The market clearly doesn't care. I mean, look at price action today. We were down over 1% on the news. The futures market dropped aggressively at 7 a.m. Here is your sell-off yesterday. The market was down. Opening bell this morning was around 1%. We flushed a little bit lower. So from yesterday's close to the low today was about a 1.3% drop. You go back to Monday, it's like this is a pretty stupid week if you ask me. I mean, the market gapped down, spent all day grinding higher, but what have we done all week? We've made lower highs, lower highs, lower highs, lower highs. Even today, even getting back to this level here could still be a lower high, and this market just kind of rolls over and works its way down. We still have this gap fill from the U.S.-China trade agreement, right? So this market's just continuing to make lower highs for now. And, if and when that changes, I would say we'd have to be back up above around 58.60. We kind of break this trend line here. Oops, that's not drawn very well. We break this trend line here. We'd have to get above like 58.50 to 58.60. And I think this, support level holds. But again, that's still a pretty shallow pullback. I mean, maybe in the 2 to 3% pullback zone, but a 3.3% pullback. So is that it? Is that all we get? 3.3%? Maybe. All right, 1405. Let me see if I can close this thing down. I don't know. We'd have to have a pretty nasty 45. I'm just going to let it run. I'm going to let it run for 45 minutes. Let's see if we come back down to my 5,800 strike price. So if we, chop in here, I'd like to see a little bit of a flush back down towards this liquidity level at 5,800. That would give me an iron fly that looks pretty good. I'd start getting maybe that profit trap late in the day, but we got to fall. If we don't, then I'm wasting about $90. But I had some profits on my broken wing, some profits on the call spread. So net, I'll still make about $150. Amazing comeback days. Yeah, I mean, it's the same as Monday, Tony. It was the same thing as Monday. You look at this week, right? Market gaps lower, fights back all day. Tuesday, right? Wednesday was a little bit uglier. That was when the bond auction failed. So Wednesday was a pretty nasty day that the Bears, I'd say, got the upper hand. Tuesday was extremely sideways. Thursday was extremely sideways. Even today with the gap lower, it's just slowly grinded back. I mean, that would have been understandable for Monday. The fact that Monday just ripped higher was kind of silly, but today was more along the lines of what probably should have happened on Monday, which would have been, okay, we gap lower, but we have the day to kind of fight back. But it did it really fast. I mean, we were down 1% and up 1% within about the first 30 to 40 minutes of trading. So anyway, I mean, just see what I'm saying. Like we're making lower highs for right now. If you look left on the chart, there's still a gap fill here towards around 57.20. There's still a gap fill around 56.66. I did take some profit on a SPY hedge. It was a 590 by 580. I was up about $270, so I took the profit. Max profit would have been about $620, but I still had to sit on the trade all the way through next week. Which would have been fine if I was confident we're going lower. But considering we started the day at the lows, 650 was what I closed it for. So about $270 on that trade. Okay, let's see what these next few minutes get back to. I'm going to go 58.05. And check the iron fly if we get there. So otherwise, it's just super choppy right now around 58.20. I'm curious, like just a small trade here. 58.20. If I sell. Oops, that's for Monday. Let me try today. So 58.20. Sell the 58.20. Buy the 10. Buy the 30. I mean, if it pins here, I could potentially pin this thing for a little winner. That's just a very tight area in case price is going to move. If I could get filled here for like 450, maybe I'd take this trade. That's a little bit. I'm not going to risk that much money. Not with 40 minutes to go. So if it stays here, it's not bad if it stays at 520. I've got some wiggle room. Let me build this one out really quickly. Let's build this out. I'll get another risk graph over here. So this would be SPX for today's expiration. It would be a 4-leg trade. So add an option leg. Today's expiration is the 23rd. So I would sell the at the monies. All right, so 2 calls, 2 puts, pin it at 520 and then 5 apart. So I'd sell the 520s. And this is just an example. I'm just trying to price this out really quickly. Okay, so I'd sell the 520 and then I go 530 or 515, 58. Is that right? 25. Okay, yep. So pin the 20, buy the 25, pin the 20, buy the 15. There we go. Yep. So it's a really, big peak butterfly. You'd have to risk about $60 to $70 on this trade, but if it ends up staying around this 520 and this 58.20 handle, potentially this pays 3 to 1, 4 to 1, but it'd have to probably cash settle. I'm kind of hoping that my iron fly works out a little bit better and we head down into this chart alarm at 58.05, and then this trade could look a little bit better. So right now I'm showing a little bit of profit here. If I go into analysis, it gets a little messy. Okay, there's my trade. Darn it. So there's my trade. We're coming down. We're getting close. Starting to show a little bit of profit here. Come on, let's break this 58.12 low. Let's get down to like 58.10, 58.05. See where this can go for the day. Okay, 40 minutes left. So if I can get into my profit trap zone between 58.05, 57.95, I've got about 75 to $100 sitting down there if I can see it pop up. But we need to break this 58.12 low. Can you look at the stock VST? Sure. VST at $158. Vistra Corp. Utilities. What do we have here? Power. I'll check fundamentals. Is this utility company? I mean, price to earnings, pretty impressive. Compared to its peers, it's a little bit more expensive compared to its peers. But I mean, utility-wise, I think that's a pretty safe sector to be in. I mean, unless we fail this whole AI infrastructure build-out, which I don't think that we will. I feel like if we really want to do it, it's going to probably come with government subsidies. I don't love that we're, just over a year ago we were down to $40 and now it's 4 times the price. So I don't love that. But I mean, sure, if you're, I would say this. I mean, if you wanted a position for something, it probably has terrible options just because it's a utility company versus like a high flying tech liquid stock. But I mean, does it offer a dividend? Usually, utility companies offer a dividend. So yeah, it'd be like AI build out data centers, right? Dividends like negligible, 0.6%, no big deal. Let me check my iron fly really quickly since I see it's coming my way. Up about $30 right now. Oh baby, this could get real good in a hurry. Okay, let me close this thing down. See if I can get like 13.50. Keep an eye on this one if we keep pushing lower. So I pulled in 14.05. Going to try to get 13.50 or lower. And then I'm looking for basically a close at the end of the day. As long as price doesn't come down to 57.70, which would have to be another 40 points lower. That'd be a like nasty drop at the end of the day. So I think if we can just get down into, there we go, we're getting close. Come on, profit trap. Give me some liquidity here, SPX. Make your way. This was the #1 gainer in 2024. I don't think that it was. I think Palantir was one of the #1 gainers, wasn't it? Palantir was like the best performing stock of 2024. If you're talking VST, I think Palantir was like the best performing stock of 2024. See what this shows. This is written. Yes, okay. This should be like everything. Best performing stocks: AAPL, MicroStrategy, Palantir, Vistra. There you go. Robinhood. Worst performing. AAPL. That is nuts, man. AAPL was #1. Wow. So we got up to 900+%, faded during that little missed Christmas rally. MicroStrategy was up, then down, same thing. Palantir's in yellow. I think in the S&P, this is one of the best performing stocks. So anyway, AAPL. What a stupid name for a fantastic stock. Yeah. Okay, Ironfly. Give me something here. Give me maybe a 13.75. I hate closing this out for just such a small win. but I also don't want to see this flirt back into into a loss. Come on. 13. And this is going to move fast. Like if price pushes, all right, I just got filled at 13.80. So that's a little winner for like 25 bucks. Um, anyway, it's more now. I'm going to see like where does it go. So out of this trade right here, I just grabbed a little bit of this profit here for 25 bucks. And again, that's nothing. If I wanted to just let this thing ride for the rest of the day, there's the profit trap. So if we're in between, 57.95, 58.05, then potentially this pays out 420 bucks. So this is where we're at right now. We're on 327. We are pushing a little bit lower, of course. Naturally, we're pushing lower, so I'm missing out. It's down to 1350-ish. It's a little wild though. I need this thing to go lower. So if this goes down below 58.05, 5800 would be perfect. Like that'd be the ideal spot. That'd be right in the middle of my profit trap. But anyway, trade's done. And for the rest of the day, the only thing I have left would be my put spreads for 80 cents, and they're still up about 40% right now. And I put in a 5-cent debit. So as long as we don't have like an absolute dump to today's low at 57.70, then these will likely cash settle, and I'll grab another 80 bucks. So that'd be 80 plus 25 and plus $70. So it'd be 150, 175. 175 in the day for a little activity. Gold, yeah, gold's doing well. I mean, gold's up. I'm still not buying gold yet. I own gold. I mean, gold, my positions, I'll take another look at them here so you can see them. So gold, I'll just do the math. So gold would be, here's my exposure. CEF up around $4,300. Okay, so that's a gold and silver play. I can, if I throw in like non-US or like a diversifier from the S&P, it'd be like anything Japan, anything Japanese yen, Bitcoin. But I'll just look at gold, silver, and Bitcoin right now, primarily. So what else? GLD. GLD's up $22,000. So plus $22,000. IBIT is up $59,000, 59.3. PHYS is another one. PHYS is another kind of gold and silver hedge play, up another $4,300. And then SLV is up around 13.5. So right now I'm sitting at about $104,000 of profit on just gold and silver and Bitcoin. I have no intentions of taking profit. Like I'm gonna ride these out a little bit longer. I think these are pretty good plays to have in the portfolio for 2025. I think that Bitcoin probably makes all-time highs and continues to push higher. Gold, I think if we have a pullback, I think gold is going to stay very well bid. I think silver has the potential to give us a really nice trade if we can break this resistance. I think silver just has to break 35. I mean, to me, if we can break 35 on silver, it's game on. This is a really nice swing trade right here to hit some symmetry. Okay. Now this could take a little bit longer than I want it to. If we let me change the color here. If we break this resistance, if we break silver's high, I'd love to see this thing just really start to ignite to the upside and get into open space where there's not much stopping it. However, you can see this channel low. Okay. If I clone that and go parallel, I could see this. I could see silver making a nice run to a measured move up towards around 41. But to me, this is a, buy the dip and stay the course and have another move up here to wave 5. So I'm looking at a 1, 2, 3. Either 3 is in here, 4 is in here, and then 5 is here. I'm trying to hold this thing to like 45 to 50 bucks, and that's another like 35 or 40% on the underlying. So I like it a lot. I mean, I'm still willing to add more. I mean, if we are going to be range bound on silver, I'm still going to buy more at 29. I'm going to buy more at 26, and I still think this heads higher. So I think there's some good commodity plays in 2025 in addition to all the other stuff. Fair. All right. What else you want to see? Take a look at bonds. Okay. Bond market. I mean, I don't know what to make of this outside of clearly the bond market is trying to tell investors something. So, 10-year yield off the highs a little bit, 20-year yield higher than Liberation Day when the market, kind of broke and caused the about face in Trump and company. And all of a sudden they went to a 90-day pause to give the market some relief. We're higher than that level. You look left on the chart. I mean, maybe this is the next level on the 20-year yield that gets Trump's attention. Do bond yields rally to 5.35, 5.4%? I hope they don't, but it's certainly possible that they do. Okay. 30-year, again, around 5%. Do we get up here towards like 5.15? Okay. 10 and 2-year, disinverted. 10 and 3-month, back to disinverted. This is the big question on like, if a recession is going to happen, is it because of a disinverted yield curve? I think that the only way that the U.S. has a recession is if the unemployment numbers in the labor market starts to get really, really soft, or the housing market starts to really crunch. So again, it's not that hard. If you're looking at U.S. jobless claims, if you're looking at U.S. initial jobless claims, which is I guess same thing, or you look at continuing jobless claims. Okay, so that would be your picture. Like, are they trending higher? And I guess you could also throw in the unemployment rate, which is coming out during non-farm payroll the first Friday of the month. Unemployment rate. Okay, are they trending higher? On top of that, are we seeing housing market problems? So that could be residential, residential construction, job data, also housing prices, so new versus existing, and obviously rates, right? So I think that housing prices, if they start to come down, that could be it may not be like super painful, but if we start to see like a 10% haircut in housing prices while rates are going higher, that's the trade-off. If you want house prices to get cheaper and more affordable, you have to see prices come down, because I don't think rates are going to come down aggressively. I think we might be a year or two away from ever seeing like a 5+% mortgage. It's so sticky right now. And until until the market has a lot more clarity on this whole tariff situation, the bond market's going to price in inflation. That's essentially why global yields are higher. Everything's going to get more expensive. Obviously, policies are a bit more nationalistic right now. So I just think for the U.S., everyone's talking recession. It's really not until these things start to show us higher levels. I mean, this is where the consumer is hurt the most. If your home is worth 10 to 20% less, that's going to change the way you spend. Okay. If you don't have a job, that's going to change the way you spend. So without these two things happening, one of the two or both of them, without these things happening, I don't see the markets going into like a big tailspin, right? A big spiral to the downside. I see that the markets just might continue to grind higher, melt up higher, assets get more expensive. We kind of build our way up into another asset bubble, whatever that looks like. But it's not something I want to necessarily be fading. I'm not super bearish right now at all. I'm playing strategic hedges, but I'm still bullish. If we look at the bigger picture, I've talked about this, last week on my Sunday video that I posted on TradingView and YouTube. Go to the monthly time frame here. Okay, this is a little bit easier to see on this chart. Let's go blank. There. Okay, if you start from the COVID low, just count out the waves. 1, 2, 3. Okay, this pullback was wave 4. It just happened to be very fast. Wave 5, that area. Okay, that's 6,400. I could see us going higher than that just based on this correction here as well. So I think we could go between 6,400 and 7,000 before this market was really going to be kind of toppy and bubbly. Does that make sense? So if I'm looking at like a top, I think I'd be trailing stops into like 64, 6,500. And if we melt up a little bit higher, I think by 7,000. And if we get really extreme overbought conditions on, daily, weekly, monthly charts, it's going to be an interesting timing, like what is going to be the catalyst. But if it turns over, I think we're due for another correction. Is the Fed likely to say anything? I don't think they have a meeting next week, do they? They don't have a meeting next week. They might have minutes next week. What do they have? I don't think anything's coming from the Fed next week. Yeah, minutes only. They're not going to say anything. They're not going to say anything. They will likely sit and just kind of see how this whole thing prices out. Here's the probability right now. See what the future. And look, it's not really what the Fed says. It's like, what's the market say? What's the market say? The market says nothing in June, nothing in July, and this probability has gone down a little bit, but they're looking at possibly a cut here, September. That's still highest probability, but it's not staggeringly high. So, June, July, pause. Does that change? Maybe. But right now there's a 98% chance that nothing happens in June. So we roll into next week with meeting minutes. They're not going to say anything to really deviate this, I don't think. That's a very high probability. Okay. Oil, I said that I think we talked about that, Tony. Between 55 and 65 is just a big range. I was really surprised to see copper take off today. And what else? Good on that, Lee, for the Fed. I don't think they're going to do much. That FOMC minutes will be probably just a release. It'll be pretty standard stuff. Gold's up. Seal's asking about gold. Gold is up. Cool. If you're a short-term trader, gold's up. But I'm not a short-term trader. I'm looking at gold as a position trade and a hedge in an asset that I want to hold. I think this is a good reason to be long. It's kind of an anti-dollar play. It's kind of a global bid play. Central banks are loving gold a lot. If we're going to see a weaker dollar, I'd rather be in gold. I'd rather be in Bitcoin. So maybe your old guard, so to speak, is more happy and excited about buying long gold. But your new guard and more of the tech savvy, the Web 3.0, the AI build, the future is now type thing, like that's your Bitcoin crowd. So we'll see. But either one, I think having gold, silver, Bitcoin is a pretty good play this year. It's certainly, look, the markets have been reflexive to not, being down 20% like they were from peak to trough. But that doesn't mean that we're crushing it. It's like, look at the difference. Let's just compare this really quickly. Okay. Let's look at let me go back to the daily chart here. Let me go to that blank workspace. This one. Okay. Let's go to the yearly candle. Right. And I just talked to the team about this today. I am considering running a portfolio course where I just only have a couple of instruments, and it would be SPY, gold, silver, Bitcoin. That's it. So if I look at a 12-month chart, okay, let's build a brand new workspace here. Create new layout. Final hour, clean. There. I didn't want to have any lines on it. Okay. So if I did a SPY, IBIT, GLD, SLV. Okay. Now, I'm still deciding what I think would be an appropriate mix. If I wanted to say SPY, 25. This might not be bad to say like 25, 25, 25, 25. And for simplicity's sake, let's just say that's what it is. Okay. So we'll say that this is our example. And I'm going to do a 25% allocation into each ETF. Okay. So if you had a $10,000 account, you're doing $2,500 into each one. I'm going to keep the number simple. I'm going to say 100K. So we'll say 100K. All right. So for the year, let's do the math on this. SPY, 25K start equals, and then we have IBIT, 25K start equals GLD, 25K start, and SLV, 25K start. Right. So, and this is like an at a glance. So from the beginning of the year, S&P is still down approximately 1.25%. Okay. So 0.0125 times 25K, you're down to 24,687. So that's your S&P balance as of now. Okay. How about IBIT? Where's my blank here? IBIT. IBIT obviously dealt with some drama here, but it is up around 12.73%. So 28,182. Okay, gold's killing it, right? Gold is up 27%. Wow, 27.19%. Nope. 2719 times 25K. Yep, there we go. So 31,797. 31,797. Not bad. And silver, also for the year, not too shabby. Up around 14.14. Up $3,500. So 28,535. $28,535. Okay, so let's add these up together. How is this little 4 ETF portfolio doing with a diversification of broader market US, Bitcoin, gold, and silver? Okay, so that's, you might be asking, why not put this stock in here? Why not try this? And look, if you want a broad market, be a haystack basket trader, trade the S&P. So I'm not trying to cherry pick and be like, well, Nvidia is doing great this year, or the Palantir is doing great. I don't care. Stock pickers after runs of 5, 10, 15, 20 years. I don't know if there's ever been a run of over 20 years where the top 5 or 10 stocks still become and stay the top 10 or 5, 5 or 10 stocks. So ultimately, I'd rather just own the basket and own the haystack as opposed to owning individual stocks. Unless you like dividends, right? Unless you like income trading. So let's add this up. 28,535 plus 31,797 plus 28,182 plus 24,687. So you're up 13.2%. 13.2% year to date. Okay. Question for everyone. How would you feel about your portfolio in 2025 if you're up 13.2% year to date? I feel pretty good about it. I mean, I'd have happy clients. That'd make my life pretty easy. This is all I had to focus on was these 4 ETFs. And, this is also not doing anything other than buying and holding, right? So if I just maintain a 25% allocation, the question now is, do I dial up or dial down? Do I just use, an income method like options? I mean, I certainly would consider trading some options and hedging the downside if I felt that it was necessary. Case in point would be I'd have very inexpensive plays on the SPY, very inexpensive plays on Bitcoin or IBIT and gold, and I mean silver too. But I'd say your bigger hedges would be, hedges could pay out really well on these three. Silver is a little bit tighter price range, but I think if you had any type of hedges to start out this year, you could probably narrow this loss a little bit. You could probably increase this, and you could certainly actually there probably is wasted hedges on gold because it really didn't pull back much. So I mean, hedges again serve as maybe just helping bulletproof the downside if we have a nasty spill like we did this year in the S&P and the Nasdaq. But still, plus 13% year to date is pretty good. So, like I said, um, I talked about this with the team this week, and I am going to allocate um, one of my own little portfolios to do something along these lines. I may shift the balances because I want to be able to address this. Like, you may be considering, if you have a smaller account, you don't have to have 100 grand, obviously. So 10K, 5K, could you do something similar with the same type of 25% allocation? Sure. And then you just play with the pie chart, you know. But if I were to pick, let's look out 12 to 24 months. I mean, I think the market, just with everything that's going on, we have a bunch of noise in the market. We pivoted hard back in April. I think the stock market's going to still find a way to get to all-time highs unless the U.S. labor market or the housing market starts to deteriorate. So it's a testament to the U.S. resiliency, and it might be an ugly, messy, noisy grind, but I think we're still going to get to all-time highs. So SPY broader market probably does fine. Bitcoin, it's a bit of a levered play, right? I mean, Bitcoin is naturally a little bit more volatile than the S&P, but it's come down quite a bit. I mean, the days of 60, 70, 80% pullbacks on Bitcoin might be a thing of the past because of how, wildly popular it is now. I mean, we think we officially crossed like over $2 trillion in market cap on Bitcoin with this last surge to all-time highs. Gold, I mean, I think right now might be one of the biggest global needs to get away from like this fiat threat, which would be owning gold. And Bitcoin stands for that as well. But like I said, the old guard is still very much buy gold, right? It's the blend of like, Bitcoin is good alpha. Bitcoin's been one of the best performing assets for a while now, the last 10 plus years, but it's not without crazy volatility. So I think that's why you don't just throw all your eggs in one basket. But gold and silver, I like silver better. I think silver is a better technical trade than gold right now because I think gold is overextended. But looking forward, if silver and the gold and silver ratio improve and silver gets a bit of an upper hand there, both of these do pretty well. But if out of 3 out of 4, you're essentially break even on one and then positive on the other, that's a pretty good return. You know, MP says, if you have one in place, how would a huge gap down work at the open? That's a great question. MP's asking a question on a trailing stop loss. Great question. So segue here. Any questions on this so far? I just thought we'd have some fun with numbers. I'm going to check on this. We've got 10 minutes left. Let me check on this iron fly really quickly. I don't think I think I'm probably fine by closing it the way that I did. Um, yeah, it's trading around 1370, 1380 again. But if we do make our way down to like 5805 or 5800, I just more like, huh, that's going to be my reaction because maybe that profit trap is a possibility. Right now it's 349, so let's go to 349. Yeah, I mean, if we get into my profit trap, I'm going to see like 150 to 250 bucks. It's getting close. Now it's trading a little bit higher. So maybe I'm up around $80 to $90 right now. Anyway, okay, trailing stop loss. So new topic here. So trailing stop loss. Okay, this all depends on the type of order. This will depend on the type of order. And this is true if you're in the Forex market, in the futures market, in the stock market with an equity position, even options trading. You have a market stop order or you have a limit stop order. And this makes a big difference. Okay. A market stop order would be set the price. When price hits it, you're filled at the next available price. And so Mark, to your question there, if you put in a market stop order and price gaps lower, you're not going to get filled at your stop order. You're going to get filled below that most likely because of the gap lower. Does that make sense? So a market stop is get me out. I want to activate the trade, and the broker will say, okay, we recognize you want to get out of the trade, so we'll fill you at the best available price. Here's our iron fly. Right now it's trading for about 1270. Okay. Just having some fun with this management. It's up about maybe $100, $150. It's super, like the bid mid ask is a little bit wide, but I think I could probably get out of this thing for like $13, $13.25 maybe. Maybe grab 70, $80 out of it safely. Um, I mean, what I rarely, if ever, do is hold a pin trade like a excuse me, like a butterfly trade or an iron butterfly. I rarely hold those into the day, being cash settled. It's such a difficult thing to do. But what would be exciting would be maybe this trade, by the time we close here in about 8 minutes, if price is right in between this 57.95, so prices between this level and between this level, this maxes out with about a $500 winner. But if price pops up here or blows through the downside, this becomes a risk very quickly. My max risk was about $90. So right now it's showing about $100 profit, and we still have 8 minutes to go. The butterfly on this thing, like the iron butterfly with a little bit of a flat top, this fills entirely at 4 p.m. So it's still kind of dancing around like, where's everything at? This is my 58.05. This is my 57.95. So we'd have to push a little bit lower to see this thing top out. Yep, you did it. So you're watching, Larry. I see it. All right, let's go back to Mark's question here. Mark, is that making sense? So if you put in a trailing stop loss like on a Friday and the market gaps lower on a Monday, a market stop order is going to fill you at the first available price. So if that gap's lower, you'd get filled at that gap lower type price. Ooh, look at this thing, 58.01. Now this thing's paying out better. Now it's 1280, 1270. Maybe a bit more profit rolling in. Okay, final minutes. It is now 3:53. This is what the P&L is going to look like. We're in between. This is pretty perfect. So hopefully, I mean, and again, it depends on how liquid the fill is, but you're right at the peak of this thing. It's not like the peak at 4 p.m., but in the next 7 minutes, this is pretty good. Like I would be, if I was still in the trade, I'd be closing this thing down for about 12. $12 would be great. 12.50 would be great. That'd be up another $150 to $175. So that was good. Good play. Yeah, I mean it's trading right there at 12.45 mid, 12.05 mid, 11.75 mid. It's obviously hopping around pretty aggressively these last few minutes. I just wouldn't flirt with it too badly, but it's perfectly at 5,800. I'd say that's good enough. Nice, Larry did a 59.20 by 59.30 call spread. Very nice. 59. How how much did you take on that trade, and when did you take that? I was looking at a trade. I actually put a pending order in today at like a 59 40 and 59.50. It didn't get filled. How much did you take on that spread? All right. We'll come back to that in just a moment, but looks like about $12 is a pretty safe close right now. And if not, probably like a 12. I mean, yeah, we're trading like 11.60, 11.70. I could get a $12 fill. Okay. I mean, I'm happy taking that trade off the last 5 minutes. It's a good win. Okay. That's where we're at. Let's go back to the stop loss orders before we wrap up today. So a market stop order, the broker is going to fill you at the available price. So if it's a gap lower and it's below your stop loss, it doesn't matter. You're still going to get filled at that first available price. Okay, a limit stop order is you can set the stop order, price activates it, and the broker looks to fill you at this limit stop level. So if I'm using stop losses, typically I'm using a limit stop order, not a market stop order. And the reason why is, if we're trading liquid instruments, we should be able to get out where we want to get out. I think so. Um, I usually don't like to use market stop orders, especially if a gap is a risk. A limit stop order is, price is going to have to, so that gap lower that Mark was talking about. If it gapped lower, his limit stop order would be activated, but it's not filled. So it's activated because price is now below it. But if price fluctuates and comes back up to it, the broker is able to fill you at that limit stop order so you can get out where you put the price, what level you put that price at. Does that make sense? So, again, safety, if you're like, I just have to get filled on a stop order, then a market stop is going to be the safety one, right? If you're up a bunch of profit, market stop is going to be relatively safe, but you may get filled at a worse price than what you want. You can't control that if you're doing a market stop order because the broker is only going to fill you at the next available price. A limit stop order, you're going to get filled at the price you want, but only if it gaps lower, price has to now come back up and find it in order for the broker to fill you at that spot. Do they execute in pre and post market? That'd be up to your order. If you put like a good till canceled, there's also good till canceled plus extended. So like Thinkorswim, for example, if you choose good till canceled plus extended hours, then yes, you can get taken out with extended hours. But if it's just good till canceled, you're probably dealing with the opening bell to closing bell. Larry said, I did the Iron Condor 305 out at 150. Excellent, man. Good. Very nice. Yeah, the Iron Fly is still looking pretty good end of day. Okay, so I've got this bad boy right here towards the end of the day, still looking to close out. My 5 cents is not filling. It's up 100%. I'm just going to go ahead and cancel this and let them cash settle it for me. So there'll be another $80 to add to the total today. We have 2 minutes. I don't think we're going to drop 38 points in 2 minutes. So Iron Fly is out. Broken Wing Butterfly was a win. If you held on to the Broken Wing Butterfly, this would have been closing out for, yeah, this is also full credit. So the original trades we took in daily profit play today, this would be up 95 cents. This would be up 80 cents. And this one I did in Iron Fly. This wasn't a group trade, but that's up about $1.50. Not bad. And it settles here. I mean, again, like maybe this is like a super lucky trade at the end of the day. 13. Now it's trading for like $10. Like that is, again, I consider myself lucky if I was still in the trade, but we're right in between these strike prices. But in the next minute, if it jumps up here or falls in between, it's like 5,800 is perfect trading. That's not easy to do, right? But it's now back up to like almost $12. It's still profitable, but if we fall back into like 5,800, it's trading under $11 right now, under $10 right now. Let's see where this thing cash settles. 58.01. I can do the math on this thing. So wherever this thing officially cash settles, there you go. So that is your, let's see if this thing freezes. So it looks like we stopped here at 5802.83. Okay. So that should be enough. If I let it go all the way to close, 5802 would be a, trying to think, $5 minus 283. So that would be $2.17. That'd be the win. $2.17. So another $217. Actually, that'd be if it was pinned. I think it's actually slightly better than that. Let's go to this. So we're looking at a 5802. 5802 is right here in the profit trap. So that should have closed, cash settled for the full win of around $405. I got into the trade for 90 to 95. It was 1405 was my fill. So that should cash settle around $400. Again, I didn't hold the trade that long, but it worked out to be like inside that 10-point window that actually did pay max amount today. Again, consider yourself lucky, but that was a good trade. Okay, let's go here. So, Mark, let's wrap up with your stop order stuff. You get on this market stop versus limit stop. If you're telling yourself I absolutely want to get out of the trade, then sure, a market stop getting out of the trade is going to get you out of the trade. It's the broker's, the broker can only fill you at the next available price, right? So you set the price, price activates it, and then the broker can fill you at the next available price, and that might be below your actual stop loss. That's the only risk you have, really. Okay, depending on how liquid you're trading, what liquid instrument you're trading, that's probably within a couple of cents. I've taken long options on the SPY, long options on the Qs, intraday stuff, zero DTEs. I've had a stop loss trigger within about 2 to 5 cents, so it's not like you're giving back an arm and a leg. But obviously, a gap to the downside could hurt. But at the same token, if you gap higher, you can just modify the order and try to trail out more. The limit stop order is you telling the broker, do not close my order unless it's at that price. So that means even if price activates your stop loss order, the broker can't close it until your limit is filled, which means like that bid, mid, ask, that's going to have to fluctuate back to your limit order a couple times in order to fill. So if you want to set the level, then use a limit stop order. Again, some brokers you might want to check with your broker on this, but some brokers will allow you to trade extended hours and also have trailing stop loss. Stop losses managed at extended hours. Some don't. That's a broker to broker question. That's you to broker. I'm not really sure. Okay. All right. So to recap for today's session, I've also got to jump over and do a quick session with my Project Options Edge members, which I'll jump in a couple minutes. But a couple things just to recap. A little discussion on a simple allocation. More of the pie chart approach to trading. 25% allocated each one of these ETFs, and you're up 13.2% net, which is not bad considering the S&P is still down. Right? The Nasdaq I think might be slightly positive on the year. Are we positive on the year for QQQ? Nope. So we're still slightly red on Nasdaq. We're slightly red on the SPY. So that's all you did was like all eggs in one basket with no protection. You're essentially flat after 5 months of trading. That's a little frustrating. If you're up 13%, that feels pretty good with just a little bit of diversification. Okay, like it certainly could be worse. So that was a fun little discussion. Like I said, I talked to the team about this. I'm actually very interested in allocating, to a portfolio, just a fresh account, and just trade this way. And in addition to this, it's like whether I want to dial up or dial down the allocations percentage wise, and also incorporating some inexpensive hedge plays to also protect the downside. I think if I were to do that, then I can, at least get this type of gain, possibly do better if I'm protecting downside hedges, right? So anyway, it's fun. And then trailing stop loss discussion, reviewing all the stuff on the day. Daily profit play was good for the day. Recap for the week. It was a busy week, but not like I didn't have a ton of crazy positions. I think we did like 11 for 13 on daily profit play this week. I had really small losses on newsbreakers. 5% loss on URBN, which by the way, where'd that thing finish at? Okay, if we held on to URBN, you would have lost. So I'm okay. Like it was offering profit this morning, and then I took a 5-cent loss. I closed it out at a 5-cent loss, so it was a tiny little loss. And then it was offering another like maybe 40, 50 cents profit, and then it was showing a loss again. So if you didn't manage the trade, it probably would have been a loser. But if you did manage the trade, you had early opportunity this morning and a later opportunity like early afternoon today to manage about 40 or $50 a contract. Okay, ELF. Unfortunately, that was a fake out trade because we had earnings expected for the 21st, and all of a sudden they got pushed to the 28th. So I just closed that one out for a small loss. I wasn't going to sit and trade something that has no catalyst. In Baidu, our max risk on the trade was $5. I got out of the trade. So I mean, we pulled in 440, got out for a $5 debit. and it was down about 13%. So all in all, like very quiet news breakers. They just, it was pretty noisy, not a lot of movement, but certainly happy that we cut the losses early. And then double ups. Had a winner on SPX, had a loss on SPX, had another winner on SPX, had a loss on SPX. I think it was like 2 for 4. It was kind of a wash week on double up, trying to go after some pin trades and some butterflies. Some worked, some didn't, but that's how it works. And then yeah, that's it. So good stuff. I'm going to jump over into my Project Options Edge. A couple things I'll give you a heads up on. So let me see if this is running. Gosh darn it. There we go. So this will be a discussion for next week. If I've got some traders interested, I just want to show you. I'm going to a whole series on this, but this is a class. Basically, it's a scanner offer next week. I will be doing a roundtable on Wednesday. All are welcome to join. I believe we start at 1 p.m. Eastern time. If you're in my Telegram, we'll have more posts on that, but this is going to be right here. So this should be. See what I can grab here for the link. If you'd like to register for this, here's the link. This is going to be the roundtable for next week. Roundtable, May 28th. Okay, there's a link for it if you like. It's almost 5 months in the making. A trade idea generator, which is, look, I've got a lot of stuff going on. Opening bell to closing bell. I'm always trading. I'm always pruning. I'm always looking, and this to me gives me a way to filter out literally thousands of instruments to try to find something that's actionable. So just a quick thing. It's like get ready, get set, and go. And then I'm looking for either price to go up or down, or I can trade it both directions. I sometimes like to trade everything both directions. Okay, it just depends on the setup. But if I have high volume here, okay, I mean I've got this is a slightly different watch list from yesterday, but I would say Affirm, Walmart, FCX, U, ASTS, enough volume and a good setup. I'll take a look at the price something out, see what I have for the next maybe 30 to 45 days. Right? So in one click, I've got 4 or 5 actionable stocks. Maybe I find one I really like trade-wise, and there's my pinch point scanner. Same thing here. Volume on this one a little bit lighter, so I wouldn't take the trades unless I had higher volume. But these are ready. I mean, it's get set isn't like you're on the starting blocks and this price is ready to rip. So I like the get sets. I love the goes, and this is what I'm scanning for. So we're providing access to this with the pinch point scanner dashboard. We'll talk about that more next week. Okay. Larry, did you email support at prosperitypub.com? Or if you want to send me an email, you can send me an email. You can use this email, chrispulverpub@gmail.com. chrispulverpub@gmail.com. And just that way, if I have your email, I can forward that to the team, and I'll make sure somebody reaches out, get you hooked up with some Project Options Edge. Okay. All right. So anyway, really excited about the pinch point scanner that's coming next week. I should start talking about that more after the roundtable on Wednesday, and service will be starting. I'm doing master classes on it in the first week of June. So pretty excited about it. Yeah, it's been a long time in the works. And what's nice about this is the framework of we have live data feeds and all this stuff. I plug in all of my metrics and all my indicators and all my requirements, and I can do this now for some of my favorite strategies. So I can basically filter and search for all my favorite strategies. So I mean, this is like my test that is a core strategy. And now, once we got this up and running, it's like awesome. I'm going to build out some really easy, trade idea generators that it's like for simple scans and dashboards. This strategy has X amount of trades lined up. This strategy has X amount of trades lined up, and that way, for any member that follows a certain strategy of mine, we've got some good trading by a really easy way to find it. Cool. All right, so we'll talk about that more next week. Put the registration in there if you'd like to join me. You'll see it. You'll see a pop up in Telegram as well. So if you'd like to join my Telegram and Discord, I'll throw it right here. Here is Telegram. So Chris Pulver Telegram, and I'll throw in a 30-minute link for my Discord if you'd like to join. So invite people, edit for the next 30 minutes. Okay, and Chris Pulver Trading Discord. There you go. So that Discord link is good for 30 minutes. Telegram is good since it's one to all. I just talk to everybody here in post. Project Options Edge. I'm going to start this class here in a couple of minutes. We have a new trade on HIMS. We have a new trade on MO. We are going to continue to roll on IWM. We've got some trades on Dell and PayPal. So we'll just review those in class here in a few minutes. Alrighty. Have a good rest of the day. Have a great weekend. Monday markets are closed. No live sessions, no anything for me on Monday. I will be traveling back from Chicago, I think, if I can find a good flight in the morning, unless I can find something Sunday night. But anyway, have a good weekend. Thanks for being here. I'll see you all soon. Thanks. Bye.